And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld, taking you through to that closing bell with the global simulcast. We're joined now by Carol Massar and Tim Stenovec from the radio booth. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube here on Fed Day, the last Fed Day of 2025. No surprises in the cut, but maybe a little bit of confusion about what comes next, Carol.
Yeah, absolutely, which is something we've been talking about all week, right? And that's what everybody wants to know, what comes after this meeting. Having said that, definitely seeing some outperformance in terms of the KBW Bank Index. That's up about 2.6%. We also, we just mentioned, too, we're watching shares of Warner Brothers Discovery up about 4.5%. President Trump saying any Warner Brothers deal must include a sale of CNN. So certainly this gets more interesting, and it makes you think what deal's going to happen.
Why does it need to include a sale of CNN?
I don't know. We're going to have to find out from the president.
But remember that Netflix's offer does not include acquiring CNN. It doesn't include acquiring those traditional cable channels. It only includes the studios. So what he would be speaking about ostensibly is a Paramount Skydance's deal, which includes, all of Warner Brothers Discovery.
Yeah.
Well, we've certainly heard a lot of opinions on what is going to happen. Now we have the president chiming in as well. We know that this deal is going to take a long time to play out. Certainly got a little bit more interesting, but so too are these markets in terms of being interesting when you consider the S&P 500 moments away from a record high.
So let's go back. So we have Trump also speaking at the White House, decided to hold this meeting at the same time Powell was speaking. He is also addressing the issue with regards to interest rates as usual, making the case in his words that apparently Jay Powell has not done enough. He's also talked about the selection process for a new Fed chair, said that he's meeting today with Kevin Warsh. So a lot of what comes next for the Fed, of course, will depend on who's in that Fed chair seat come May of 2026, and maybe we get a little more clarity on that in the weeks ahead. Meanwhile, here on this Wednesday afternoon, does look like record highs for at least two of the major indices. The S&P 500 is going to close higher, 6,886 and change, up about 46 points or 0.7%. That's a record high. The Dow Jones Industrial Average up almost 500 points or 1% on the day. The NASDAQ Composite adding about 0.3%. And the Russell 2000 up about 1.3%. And that is also going to be good enough for a fresh record high. We should also point out that the KBW Bank Index also closing today at a fresh record high.
Yeah, real surge in that, no doubt about that. And that Russell also moving significantly, as you mentioned, Romaine. So really some standout. Hey, S&P 500, let's go back to the big caps if we may. 389 names in the S&P 500 higher today, 113 to the downside, and Katie, one unchanged.
Let's take a look at the sector level here. Broad breadth overall, 9 of 11 sectors finishing in the green. You can see that big tech finished just a hair higher. It was industrials really, though, that stole the show, up by 1.8% as a sector, followed by materials and consumer discretionary. In terms of what didn't perform on this Fed Day Wednesday, utilities down about 0.1%, and consumer staples pretty much flat on the day, but slightly red, Carol.
All right, let's go to some of the individual gainers. GE Vernova, shares climbing 16%, biggest one-day gain on record. So this stock soaring. It's the top performing stock in the S&P 500 today. The company doubling its dividend, increased the scope for share buybacks, and raised earnings projections. Keep in mind, this is a company, we've been talking about this here, right, that it has really benefited for the soaring U.S. demand for electricity, whether it's data centers, AI largely, and just really the overall electrification of the economy. That stock is up about 118% year to date, and so quite some outperformance there. Let's go to Warner Brothers Discovery, because this one certainly on my list. I think it was a top gainer in the NASDAQ 100, 4.5% to the upside. We just got some comments from President Trump saying that any deal for Warner Brothers Discovery must include CNN, and as we pointed out, that deal, the offers that we've gotten, Paramount includes the CNN property. The Netflix deal does not. But nonetheless, Warner Brothers Discovery, it's up about 4 days in a row, a gain of about 16%, up 135% since September 10th. And just for something different, Dave & Buster's, I know it's a small cap company, plays the ticker, up about 13% in today's session. This is Wall Street analysts highlight improving comp sales trends in October and November despite a third quarter miss. And during the conference call, the company did come out and say that traffic at its dining rooms late in the quarter was meaningful up year over year, with October same-store food sales being the best month of the year and improving in November. Stock is down about 31% year to date. 38% of the float is short. So
hey, I just want to add an honorable mention in there too,
Please.
Carol. Keep an eye on shares of Cisco, which have been rallying now for 7 straight days, adding 0.9% on the day. And that's actually going to be good enough for a record high, and significant because it hasn't hit a record high since the dot-com bubble burst all the way back in 2020. The first record high for Cisco in 25 years. And I bring that up as well because, of course, we talk about some of these old tech stocks that have found some new life here in the AI era. We are expected to get earnings a little bit later today from Oracle, which, of course, hit a record high back in September.
Well, before we get those earnings, let's go over some of the other movers to the downside today on the day. I do want to start with shares of Netflix, down 4.2% today, 6th session in a row to the downside. This is the longest losing streak going back to January. Now, over this time, the last 6 days, it's fallen 15%. That's the worst since 2022. This all as the bidding war for Warner Brothers Discovery heats up. And just a reminder of what we heard from the president moments ago at the White House. He says that any Warner Brothers deal must include the sale of CNN. Also, Paramount out with some headlines, too, saying that the Netflix cash component is about $7 a share lower. Paramount also says in a letter that its $30 a share offer is superior. So like Katie said, this story is one that continues, but Netflix has taken a hit over the last few days as a result. Also, large hospital chains, including HCA Healthcare and Tenet Healthcare, fell today after reports indicated that Republican congressional leaders are considering a Medicare pay cut for hospitals as counterproposal to Democrats' demand to renew Obamacare subsidies. HCA Healthcare, ticker HCA, fell 4% today. That policy was included in a list of healthcare options presented to Republican House members in a meeting today. This according to a document viewed by Bloomberg. It could lower costs for patients and save the Medicare program substantial amounts of money, but it has been opposed to hospitals due to the higher overhead costs. And finally, the parent company of Instacart, Maple Bear, down 6% today. It was one of the numerous online gig economy stocks that took a hit, including Lyft, Uber, DoorDash, and more. This after Amazon said it's expanded same-day delivery offering for perishable groceries to over 2,300 cities and towns. Romaine.
Oracle earnings crossing the wire right now. Let's get right to it here. It does look like the top and bottom lines are meeting. Second quarter numbers up about 14% on the revenue side to roughly $16 billion, though that does look like it's just a tad light. The street was looking for $16.2 billion. Revenue on a constant currency basis up 13%. That's also light. The street was looking for roughly about 14.6. We'll round that up to 15%. EPS in the quarter, $2.26 a share. That is a beat, a sizable beat. The street was looking for $1.64 here. I'm not seeing a guidance just yet here, but we should point out that cloud revenue was up 36% in the most recent quarter. Cloud infrastructure revenue, a separate category, that was up 71% in the most recent quarter, and cloud application revenue was up about 11%.
All right, let's take a quick look at Adobe. Those earnings also crossing the wire here. Adobe shares higher by about 2% after reporting that fourth quarter adjusted EPS beat the estimate. The numbers there for fourth quarter adjusted EPS coming in at $5.50. The estimate had been for $5.39. Also, fourth quarter revenue coming in ahead of expectations as well. You take a look at the guide here. They see first quarter revenue between $6.25 billion and $6.3 billion. The estimate had been for $6.24 billion. So the midpoint of that range comfortably ahead of the estimate. They also see first quarter adjusted EPS between $5.85 to $5.90. The estimate had been for $5.66. So looks like a beat and raise quarter there. You can see that reflected in Adobe shares after hour, higher by about 2%. We know this company has been pretty beaten up in the stock market this year.
I'm getting back to Oracle and looking at the commentary. Lots of commentary coming from executives at the company. Oracle CEO Mike Sicilia is saying that AI training and selling AI models are very big business, but we think there's an even larger opportunity embedding AI in a variety of different products. Oracle is in a unique position to embed AI in all three layers of our software products: cloud data center software, autonomous database and analytics software, and our application software. Shares of Oracle down about close to 6% in the after hours.
All right, let's get to the application software company Synopsis. It is also reporting its results and into the outlook. Let's start there. Sees first quarter revenue of $2.37 billion to $2.42 billion. The estimate on the street is $2.36 billion. First quarter adjusted EPS, again, to the outlook, $3.52 a share to $3.58 a share. Estimate on the street is $3.46. So it does look like it's bumping that higher. And we do see the stock up 2.6% in the aftermarket. 2026 revenue, $9.56 billion to $9.66 billion. That compares with $9.63 billion in terms of the estimate. And it sees 2026 adjusted EPS of $14.32 a share to $14.40. That, too, is handily above the street estimate of $14.11. So, again, that stock up about 2% in the aftermarket. And fourth quarter revenue, just for some growth year over year, up 38%. And fourth quarter adjusted EPS, so a look back at the quarter that was $2.90 versus $3.40 year over year. But nonetheless, tempering some of its gains in the aftermarket, but still up, you guys, about 1% here.
Absolutely. And we go back to, of course, Oracle, which obviously sort of is kind of the fulcrum for everything that we're reading now with regards to Synopsis, Adobe, and the rest of that AI trade. And I was looking through their presentation on their website, and they talk a lot about the new customers that they've signed up in the most recent quarter for the services. But a big part of this, and a big part of why you're seeing the shares down, there's a lot of concern about Oracle's ability to fund that. Remember, unlike some of the hyperscalers and the others that we've talked about who've been able to fund their AI dreams primarily with their own cash on the balance sheet, Oracle has relied on a big way on the debt markets, and the expectation is they will return to the debt markets to fulfill some of those obligations, and some big questions here about whether that erodes profitability.
All right, you guys are talking tech. I'm also looking at what's happening in the ski business. Vail Resorts reporting down just about 1% in the after hours. First quarter net revenue missed estimates. First quarter total skier visits came in above estimates. First quarter loss per share came in slightly above estimates at $5.20. Once again, shares of Vail Resorts down about 1.1% in the after hours.
All right. And back to Adobe, it is up about 2.6% here in the aftermarket, and we're looking at Oracle under pressure, continuing to see it trade lower here in the aftermarket. It is down about 5.1%.